Good morning. My name is April Palmerlee. I'm the Chief Executive Officer of the American Chamber of Commerce in Australia. America and Australia have a very close relationship. Not only are we celebrating 100 years of mateship next month, referring to the fact that Australia is the only country that has fought side by side with America in every major conflict since World War I, we also have a very deep economic relationship. America has invested $860 billion in Australia, and Australia has invested $617 billion in America. That's pretty significant considering Australia has a population of 23 million and America has a population of 323 million. So there's a very close economic relationship. The Australia-US Free Trade Agreement, signed in 2005, has been cited by this administration as a model for free trade agreements. Australia is also referred to as the lucky country. We haven't had a recession in 27 years. And partly because of that, we are investing in our infrastructure. That's what we're here to talk about today. We have a wonderful group of experts here who are going to talk to us about rebuilding America's infrastructure. The United States is falling apart. One hears this often. And in some respects, the people who say it are right. American roads and bridges are crumbling, airports are out of date, and the vast majority of seaports are close to obsolete. This hasn't happened all at once. It's been the result of decades of neglect. And none of that's really in dispute. Business leaders, labor unions, governors, mayors, congressmen, presidents, all complain about the lack of funds for years, but nothing much has changed. There's still no consensus on how to solve the problem or where to get the massive amounts of money needed to fix it. Creating the next generation of U.S. infrastructure requires dramatically reducing permitting regulations, unleashing private sector capital and expertise, investing in rural areas, focusing on transformative projects, and training 1 million workers through skills-based apprenticeships education. So as I said, we've convened this panel of experts here today to discuss rebuilding America's infrastructure and the opportunities it provides for investors. But before I turn to the experts, let me just set the scene. Public spending on infrastructure has fallen to its lowest level since 1947. And the US, which used to have the best infrastructure in the world, is now ranked 16th, according to the World Economic Forum, behind Iceland, Spain, Portugal, and the UAE. And organizations like mine believe that inaction threatens the country's productivity and economic future. Big corporations like our members, Caterpillar and GE, say that it's hurting their ability to compete abroad. And although the roads and bridges are what we all use every day and are most familiar with, America's infrastructure needs go well beyond that. Think about how we all got here today. Some of us flew. US air travel is the most congested in the world because of a shortage of airport runways and gates, along with outmoded air traffic control systems. Some of us may have come by train. There are more than 14,000 miles of high-speed rail operating around the world, but none of it here. And there are the ports. The big new cargo ships that are passing through the expanded Panama Canal can only be accommodated at 2 of the 14 major ports on the East Coast. The American Society of Civil Engineers has given the US a near failing grade of D for most of its infrastructure. The ASCE estimated $4.6 trillion in needs for roads, water, electricity, airports, ports, rails, schools, etc. And with only $2.5 trillion available, that leaves a $2.1 trillion funding gap. That would require the public sector to almost double its annual spend to close the gap, which is unlikely to happen. So we're here today to look at how the private sector can fund infrastructure in the US. Joining us today are Jack Fusco, a director and president and CEO of Cheniere Energy, an American energy company primarily engaged in LNG-related businesses. They own and operate the Sabine Pass LNG receiving terminal and Creole Trail pipeline in Louisiana. In 2012, Jack was awarded Best CEO in the electric industry by Institutional Investor. Before Cheniere, he was CEO of Calpine. Brett Himbury is CEO of IFM Investors. IFM is a global fund manager with over $80 billion US in assets under management across infrastructure, debt investments, listed equities, and private equity. Brett is responsible for the execution of the firm's strategy and delivery of strong results for IFM Investors' clients, shareholders, and staff. Brett has over 30 years' experience in a range of leadership roles across funds management and financial services. Luis Palazzi Managing Director of Acciona Infrastructure USA. Acciona is a leader in providing sustainable solutions for infrastructure and renewable energy projects around the world. The US represents Acciona's largest investment in energy outside of Spain. Luis has over 20 years of experience in infrastructure. He's been involved in numerous energy, equity and project finance transactions in Europe, North America, and Latin America. Before Acciona, he worked for Vinci Concessions as Managing Director for the US. And James Rubin, North America CEO for Meridiam, a leading global investor and asset manager specializing in public and community infrastructure. Jamie has vast experience in Washington and state government, where he has led programs to finance development and preservation of public assets, including the management of public infrastructure and housing in recovery from natural disasters, and the oversight of all state agencies and operations for the state of New York. He was a founding partner of JP Morgan Private Equity Fund, where he oversaw $1 billion in direct investment in the US. I'm going to now turn to our panel to deliver brief statements, and then we'll have a moderated Q&A.
Thank you, April. I'm Jack Fusco with Cheniere Energy. I first want to thank Secretary Ross and the Department of Commerce for having me here today. Cheniere Energy, we procure natural gas in America, 22 states. We transport it through pipelines to either our facility in Louisiana or our facility in Texas. We clean it, we refrigerate it, we liquefy it, and then we load it up on ships. We've sent out 350 tankers to 28 different countries in regions in the world so far. So before I get started with the rest of my prepared remarks, we wanted to show you a video of what's possible with infrastructure here in America. So please roll the video. So I hope that that helps, and I'm hopeful that our 29th country will be Australia soon on the eastern coast. So there's four reasons that I think that we have been so successful at investing here in America. One is just access to capital. The video said $30 billion. We recently announced our expansion plans at our Corpus Christi facility in Texas. That's another $3 billion investment, so we'll be up to $33 billion, and it's predominantly public and private debt and equity for that. Secondly, the regulatory structure here in America, and Governor Perry touched upon this, but it's very well known and clear of what needs to get accomplished. They stay on time. We've proposed another $1 billion pipeline from the Oklahoma Scoop and Stack for 230 miles to our facility into Louisiana, and FERC issued, the Federal Energy Regulatory Commission issued our environmental impact statement right on time. They hit the day exactly, and we're very grateful for that. But having certainty around regulations is extremely important. Thirdly, a skilled workforce and a real pool of skilled workforce. The video said 8,000 construction workers. We still have about 6,000. Most of them now are at Corpus Christi because of the expansion. But we've completed our projects almost a year ahead of schedule and significantly under budget. So it helps to have a dedicated workforce that knows what they're doing and can do it quickly. And then lastly, I'll say technology, because I wouldn't be up here, we wouldn't be around if it wasn't for the technology improvements on horizontal drilling or fracking. It's really been a game changer in America, and it's helped Cheniere immensely deliver an affordable product around the world. So with that, April.
Thanks. Brett?
Thank you, April. Good morning, all. And again, thank you also to Secretary Ross and the team to share some of our experience and hopefully contribute to the discussion, but hopefully also, most importantly, the action that this country needs for the benefit of the citizens and their ability to get to work earlier or into hospitals more easily. We, IFM, are the third largest financial investor in infrastructure globally. We have some significant investments here in the United States. And the observations that we draw, as April has otherwise pointed out at the outset, is there is a massive infrastructure requirement in this country. There is around the world, but there is a massive infrastructure requirement in this country, and it's, as you said, estimated to require $2 trillion more funds per annum than is seemingly available. So we have that side of the equation, which forms part of what we call the global paradox. On the other side of the equation, we have the largest pension fund system in the world in this country, and pension fund systems around the world that are more often than not funded to meet their liabilities. So they have what's called an asset liability funding gap. And so they are looking for returns. So there's a massive pool of capital in the private sector outside of government that is looking to fill that gap and looking to get access to good, stable, long-term returns. And infrastructure, an asset class they define, is one way in which they might fill that gap. So it's quite, as I said, paradoxical that this country and the world needs a large amount of funds, and there's a massive pool of capital that requires investments. And so the challenge that we've got is how do we bring those two groups together to actually help solve each other's challenges, and in so doing not just to add to the returns and the ability for people to get to retirement and be able to afford it, but to be able to invest in infrastructure and upgrade so as we have better standard of living and more productive workplaces and communities. And one of the examples that we share regularly, to supplement and complement the muni bond market, to supplement and complement the federal grants facilities that exist everywhere, is what we call the Asset Recycling Initiative, but the Asset Recycling Initiative in conjunction with a new form of P3, the Pension-Public Partnership, not the Public-Private Partnership. The pension fund capital thinks and acts in a different way. It's not to say that the others act poorly, but pension capital really is a representation of, in this case, we manage money on behalf of 19 million working Americans. We think and act in a manner that clearly supports their long-term returns, but does so in a manner that also creates jobs, enhances the productivity and the safety in workplaces, reduces emissions. So long-term workers' capital, thinking and acting to support the liability needs that run out 30 or 40 years, actually takes a 30, 40, 50-year time horizon. And from our experience, that does a number of things. It firstly optimises the returns, which is our fiduciary responsibility. But more importantly, it means that the capital that goes into these infrastructure assets, we actually enhance the quality and the provision of service that those vital enterprises serve to the community, be they social infrastructure or economic infrastructure. It is there to help people to get to work, to help people to travel on airports, through airports and get to conferences like this, to get people into hospitals, to get people educated. And if we, as workers' capital, think and act in the long term and fundamentally improve the quality of that service, more people will use it. And if more people use it, they'll be happier about it, and hopefully federal and state and municipal politicians will be more confident and courageous to actually take and embrace the Asset Recycling Initiative in conjunction with the Pension-Public Partnership, in addition to their access to the muni bond market, to help fund their massive infrastructure needs in their municipality, in their state, or indeed across the nation. So it is but one. It is an innovative solution, and this country requires and is searching for innovative solutions. So we'd encourage that model, and look forward to setting a case study, like so many other case studies in this country, that hopefully is then embraced by the community, by the elected officials, and indeed by investors. So thank you, April.
Thanks, Brett. Luis?
Thank you, April, for the introduction. And so my name is Luis Palazzi. I work for Acciona Infrastructure, one of the global players in the infrastructure sector, and more important, in the public-private partnerships. So following what you mentioned at the beginning, April, I've been here in this sector for 20 years, and I came to the United States 12 years ago, and with the objective to invest in infrastructure. And when I came, what I found was that the U.S. being one of the top countries, still the infrastructure was behind what it should be, is what you mentioned during the introduction. And that, from our perspective, mean, okay, there is an opportunity to be here and contribute to fill that gap, which is close to $200 billion per year, which is a significant number. But the second challenge was that even also being the United States, one of the more open economies and friendly to the private sector, the role of the private sector in infrastructure, I found, was really not meaningful. That not a significant direct investment from the private sector has been deployed into the infrastructure side. And however, it was difficult to find opportunities. And when we found opportunities, I saw a lot of skepticism from different stakeholders about this way of partnership with the private and the public sector. And so that was a real challenge. And I think the good news is that after 10 years, positive things had happened in that industry. So nowadays, 30 jurisdiction has P3 legislations, which is a good progress. The type of opportunities that we see today are different. Initially, we're mostly toll roads. Now we see a bigger pipeline of other sectors. Rail is an important sector, which with airport-related projects now are close to 30% of the pipeline that we see coming. And we see a lot more possible opportunities in the social infrastructure side. And the good thing is that the size has changed, and that would allow different players to really participate in that sector. In that time frame, one of the changes, or the good move, I would say, was the incorporation of private activity bonds to the financing tools available to the private sector in the states. And that gave access to tax-exempt debt to some of the private sectors consortiums, which helped to reduce the financing costs. But more important, I think, also allow the U.S. financial institutions to play a role in the public-private partnership, which I think is good. Other thing that I like to remark is that even though we always talk about P3s as a financing tool, it's not just a financing tool. It's a contractual relationship between a private entity and a public entity to bundle the risk, financing one of them, but also the design, construction, operations, and maintenance into a single contract, which hopefully would help to deliver that asset at the lowest cost possible, which is what we're trying to offer to our taxpayers. So we in Acciona, what we hope to do is to contribute with our construction skills, with our design capacity, and with our capital to trying to fill that gap.
Thanks, Luis. And now Jamie, please.
Thank you, April. And like my colleagues, is this on? I want to thank Secretary Ross and his team for giving us the chance to talk with so many knowledgeable people about these issues. We had a terrific roundtable yesterday that Luis and Brett and I were both on, as well as April. And I think we can make good progress in settings like this if we're honest with each other. Meridiam, like Brett, Meridiam, and I didn't know that there was a new term for what we do, but I'll adopt it. We also manage $8 billion globally of investment on behalf of pension funds and insurance companies. We also represent this country's retirees from states like California, Maine, and New Jersey, and New York. And we invest in long-term public-private partnerships to develop new infrastructure. So we are a combination of developers of greenfield projects and managers over the long term. We've never managed anything for less than 25 years, nor do we sell assets. And we've done it in 70 assets around the world, in countries like Africa, all through the Middle East. Is this not working? All right. There we go.
Yeah.
I'm debating whether to start over. Perhaps I'll just speak quickly. Thank you, Secretary Ross. Thanks for being here. So Meridiam, we manage, like Brett, we manage $8 billion of pension fund and insurance assets to develop new infrastructure projects in the Middle East and Africa, and of course here in this market, North America, which is the market that I run in Canada, the US, Latin America, and South America, as well as in the Middle East. And I think we've done a lot. My colleague, Thierry Deo, who was here last year, who founded our firm, has done a great deal to demonstrate across the world that the public-private partnership model is an excellent and effective vehicle to develop infrastructure assets that are both friendly to communities and can be delivered both also more cheaply and on time and environmentally and otherwise sustainably, regardless of the political environment. We've figured out how to work in any political environment effectively and successfully. I should say, let me say a couple of things from my perspective as a former senior government official. I served, as April said, for the last 5 years working for Governor Cuomo in New York State, and then did a stint in the federal government before that. I came in with a financial background, so I've got the scars on my back from my efforts to drag the P3 model into New York State, which has been something of a laggard in that respect. So I have a couple of things, perhaps pointers for those of you in the audience who are interested in furthering the model, and those on this panel who are furthering the model, adoption of the model here in the United States to address what April said correctly, is our infrastructure crisis. First, what Luis said I think is exactly right. There's more to this than finances. In fact, we really don't have a financial issue in some respects in infrastructure in this country. If you look in this audience, there's nothing but capital on the sidelines waiting to invest in this country's infrastructure. The issue is issue of capacity at the local government level. And Jack, I'm glad to hear, has had an excellent experience with the federal government, FERC and others in providing him with on-time permitting. I think it's less typical of the state and local governments, Luis probably would agree with me, to find officials that you deal with who are familiar with the bundle of contracts and difficult issues around risk transfer and others that are involved in making a successful public-private partnership work. And it's no fault of their own. The governments are stretched, and these are complicated new concepts that we're asking people to deal with, so it requires a lot of time and explanation. But we need to find ways to build up that local capacity, whether it's through development of local P3 offices or a cadre of traveling officials who will work from state to state and become experts themselves in some of these concepts. I think that'll serve us all well in the long run, and then the money will flow more freely. Second, I would say we need, and those of you in the audience who deal regularly with state and local governments, need to foster on their side a sense of long-term thinking. Jack and I were just talking about the fact that he's financed out 20 years, which is unusual in his industry. Our projects are also financed out 20 and 25 years. State and local governments aren't used to thinking in those terms. They very rarely do long-term capital planning, and my state was guilty of this as well, where they actually look at what their infrastructure needs are beyond the next few years. We need to start forcing these states and local governments to think long-term and be realistic with the public and with themselves about what their long-term capital needs are. It's not a $1 billion need tomorrow to fix your water system. It's a $25 billion need over the next 20 years to fix your water system. If you don't take on if you don't address it up front, you're going to spend the money eventually anyway. It's just going to be more expensive and more painful for the public. If we can get to a point where governments think that way, they'll understand that the cost, what they think of as the cost of doing a public-private partnership, is in fact no more expensive than anything else. It's just a better solution.
Thanks, Jamie. We have a wealth of international experience up here on the stage, so I wonder if we could just start by asking each of you what you've seen in other countries. What's worked best? What's a good model that you're aware of?
Okay, I'll go. The case study globally where jobs have been created and a funding source is frankly New South Wales and the state of Australia. They've just announced a budget where they've investing $89 billion over their forward estimates over the next 4 years in infrastructure, and they've announced a budget surplus. So it's quite remarkable. The amount of jobs that have been created in New South Wales has been the most significant for each and every one of the last 11 quarters. And what they've done is, in essence, recycled, long-term leased assets on their balance sheets like ports. And they've committed to the community to ensure that the community understands what they get rather than what they lose. So in that particular case, they monetised a long-term lease for a number of ports, raised $5.03 billion in that particular transaction, and committed to the community that 100% of that $5.03 billion would go into this road, this hospital, these schools. So the community saw what they were getting rather than what they were losing. The community embraced it. The politician got re-elected on the platform. So from our experience, that's been a fantastic way in which you've liberated a different source of capital, created an enormous amount of jobs, had the community buy into it, improved the quality of the service, and us as investors have got the opportunity to invest in a long-term asset. So all of the stakeholders have won. So it is the case study that we think should be, could be adopted in some parts of the world to liberate that capital, create the jobs and enhance the investment opportunities.
Luis?
I would add something on a different perspective. Is that working? Oh, okay. Good. Good. Better now. I would say, your question was about what we see in other countries that we may have here. I would say it is, and we have a good legal framework here. I think the only thing that I would say it's important to do that we're not doing enough here is education and communication and explain exactly what it means, a public-private partnership. It was what you said, Brett, is going after not just the financing, not just the numbers, is why that makes sense for the taxpayer, right? And if we see north in Canada, which is, I would say, is one of our good experiences, is that they have public-private partnership centers that helps the different local governments to understand, to manage the process, and to make sure that when they decide to go in that direction and incorporate the private sector into the infrastructure, they do it for a reason, and that reason can be explained to all different stakeholders. That's something which I think is important and that we can do more here in the United States to really foster the private sector investment.
I think I agree 100% with that. We need something like that. You got a microphone too. They're multiplying. I would say in terms of models that have worked, and I'm the most parochial person on this panel. I've never left New York or the Atlantic coast, but I have some familiarity with what we've done in other countries. We've been very successful investors in Africa and in Europe using a model that hasn't really caught on in this country yet. We have a pretty well-trod path for doing things like concessions for large highways, for example. But for smaller infrastructure assets that don't necessarily finance themselves, they're too small to be independently financed as projects that are attractive to the private sector. We've successfully, in the UK, for example, worked with a framework model where we bundle together lots of smaller assets in partnership with a local government that agrees to give us the right to develop assets as they develop over a period of time, or to maintain smaller assets in a larger sort of financially unified framework. We've done it, for example, with the National Health Service in a project that we call LIFT, in a model that Meridiam pioneered. And we develop small, several $1 million medical facilities, as small as local community health clinics in the UK in partnership with the NHS under a financial framework that allows us to finance them projects at the parent level. And it worked extraordinarily well, and it's a model that we've tried to, so far without much success, but it's early days, that we've tried to get local governments here to adopt, for example, in the context of school construction. Our school infrastructure in this country suffers from the same issues of underfunding that all the other areas of infrastructure do. And we spend an enormous amount of money on teaching resources and some other things, but very little on our capital needs. And I think this model of bundling under a framework agreement would work perfectly for schools. So we need to find a partner local district. We've tried it in a couple of places. I think we'll keep hammering on that door and eventually break through.
Jack?
Yeah, I was going to say it a little bit differently. For us, we didn't have the luxury of waiting and negotiating at the state and local levels. And the area where we built Sabine Pass was just devastated by Hurricane Rita. So we had to move quickly. So we financed the local municipalities, if you will, to rebuild the raw water facility, to rebuild the hospital, to rebuild the fire department, rebuild the school, and then actually build a housing community that we turned over, so our workers would have a place to live. But so that's a little bit different than what you all have talked about. But I do believe that all of the interests have to be aligned. And if you're going to increase a tax or go out and raise muni bonds, I think that it doesn't matter which country you're in, there has to be a lot of trust that when that money gets raised, it's going to be utilized for what it was intended for. And I'm not so sure that exists, at least here in the States.
April, if I could just say one quick thing. What you did in after Rita was extraordinary, and you deserve a ton of credit for it. I ran storm recovery for the state of New York for 2 years after Hurricane Sandy. And I know the difficulty of bringing private sector and public sector resources together to recover from natural disasters. I'm sure that what you saw with your presence down there in Houston, of course, was devastated. Yeah. Was that what happens after a disaster is that it's very unusual in government. All of the pieces of government, state and local and federal, come together very, very quickly and make things happen in a short period of time, at least in this country, in a way that they don't during ordinary times. And I think to some extent that's what we have to find the will to do in this country, is treat our infrastructure like the disaster that in some cases it is, bring everybody together at one place, and take out some of the cross-cutting communication issues that otherwise prevent capital from flowing freely.
That's a good point. I have some figures here that are pretty shocking. U.S. trade volume is expected to quadruple after 2030. By 2037, the U.S. will export more than 52 million shipping containers through domestic ports, and the country's freight is expected to grow by 45% by 2045. So to meet these needs, the U.S. needs a massive upgrade to airports, mass transit, highways, rail. It all needs to be connected. How would you go about prioritizing, selecting, qualifying the infrastructure projects that should be worked on? Should we start with you, Jack?
Yeah, so we've had to do quite a bit of it ourselves. So in regards for us, shipping, dredging, berths, that's a big portion of our business. And it's an area that we've had to work very closely with the Coast Guard to make sure we meet their specifications. But again, we haven't had the luxury, speed to market. It's a very competitive marketplace in energy around the world, and we can't wait for the funding. So we've funded that ourselves, and we've built our own ports, if you will, and we've dredged our own canals. So on the other side of that, compared to some of our competition in other parts of the world, we really haven't had to build an airport, and we haven't had to chop down a forest to build homes and roads and those things. So we had the benefit of using some existing infrastructure. Now, it may not be exactly perfect, and it may need some maintenance, but it worked extremely well for us in with our investments.
Brett?
Well, I think as the local or state entity will do the normal business case for those additional or upgraded facilities. What we'd encourage, and it's probably consistent with what I've otherwise been talking about, is that we ensure that the community also hears not just the numbers, but the narrative and the benefit to them. So there is, skilled politicians will clearly be able to substantiate a business case, but to be able to articulate that this is what the community's going to get as a result of that is I think, sometimes a missing piece, but an essential piece. And if the community buys into that, yes, we need this, we want this, then partnering that up with, at the same time, we're also going to lease something else over here to finance that. So we're not going to tax you. We're not going to tax you. We're going to give you these new and upgraded facilities. And the narrative supports that. And we're going to lease something else that monetises it, so it's come at no additional taxes or additional burden on the taxpayer directly is a really powerful narrative from our experience.
Luis.
Good. I'll give you a different perspective to your question, and now based on how we select where we want to go and pursue an opportunity. And from our perspective, and Acciona is a company different from ours here. We like to invest our equity, but also we are a construction and design company. So what we try to find first is to see if we really can add value. If there's something that we bring to the table that is different, can we bring some innovation, something that would actually help to reduce the costs and be more efficient doing that. If we find that and we can add value, then the second question from our side, do we have on the other side a public partner that is also willing to take some risks and at the same time push and move forward this project to be successful? If we find that combination and we see the political will, the champion on the other side, and we from our side think we can add value, this is the kind of opportunities that we really want to pursue. And I think we'll see more of that in the United States, and as you mentioned, not just now in the total sector, but in all different sectors, bigger and smaller projects, and we as a construction and investor would like to see that happening. We want to be part of that.
Yeah, I don't really have much to add to what Luis said. I think we agree. We operate much the same way. We look for criticality. So is it an asset? Are we being asked to develop an asset that the public needs and won't get done any other way? That's for our corporate mission, and also because those are the assets that are most likely to be financially viable and politically sustainable over what can be a 4 or 5 year fairly difficult construction period. The second is, so financial viability, we certainly look for strong partners. And then finally, is just like Luis, we look for areas that we can make a difference. There is plenty of money out there to invest in assets and new public-private partnerships that doesn't have the development experience or the innovation experience that we have from doing our work all over the world. And in the end, if the asset is frankly not complex, doesn't really require much of there's no innovation involved, it's not challenging to develop it, somebody else is going to come along and do it for probably less money than we will. The outcome may not be as good, but we need to, you have to win the jobs. The way, we bid against Acciona on case, I can think of a couple right now where we're competing for assets. You need to win in order to get to do the job. We can't win if it's not a complex situation.
I grew up here in Washington, D.C., and I worked for Bush 43, and one of the biggest changes I've seen coming back here now 15 years later is that it's not foreign policy wonks running the government anymore. It's not professional politicians everywhere. I've been struck by how many cabinet leaders, how many governors, how many staffers we've met here just at this conference who have a business background. And just like Jamie was saying, his business background gave him a different lens to look at the disaster recovery when he was working for state government. Do we have a special opportunity right now in America, in Australia? We have a businessman as the Prime Minister. The Premier, who you spoke about in New South Wales, came from her role as Treasurer before she was Premier. Is there a special opportunity here to work with government in a way that we haven't previously?
Yeah, I can tell you my experience has been extremely refreshing. The Secretary Ross in the Department of Commerce has been very helpful for us in giving us an introduction to a lot of the countries and companies that are here today to help us grow our business. And they've been 100% focused on jobs in America, and it's been very helpful on one side. On the other side, things get bottled up since there aren't folks that understand how things happen in Washington, D.C. So you have the good and the bad.
I think there's certainly leads to a more asymmetric there can be a asymmetry in knowledge, which in some countries and states around the world where that has been evened up, it leads to a much better outcome. So you've clearly got the opportunity in this country with some of the things that we're seeing to ensure that that's further embedded. One thing that I, again, have seen work is the establishment of either state-based or nationally based infrastructure specialist arms that are really about project specialists, project assessment, and the aim of those is to be independent of government and staff with experts that can make the robust financial and other assessments in a manner that's independent from the politics, because sometimes some projects might be put up for political needs. But at the establishment of independent bodies at a state or federal level, staff with highly skilled former commerce people has often been effective for all.
Well, from our side, I mean, it's clear that we see a different leadership now in the infrastructure sector. It's the federal government is pushing hard, and they have proposed different initiatives that, from our perspective, would help to promote the private sector investment there. I think the challenge is to move that leadership and to, as we said before, is communicate that to all different levels, to state, to municipalities, so to make sure that they understand that. And so we're hoping that this new leadership will achieve that. So to answer your question, yes, I think there's a change, and I think is in the right direction.
I think that, moving away from sort of a partisan approach to it, I think it's certainly important to have a business influence on the conduct of government. I think, I'm a lifelong Democrat, and I say not very proudly that there's a substantial wing of my party over the last number of years that has adopted a kind of virulently anti-business and overly pro-regulatory approach to governing, which I don't agree with, and I do everything I can to push back against it. And I think that, we're coming out of that phase. So I think it's important to have a balance of, business and government at the same time, which I do think we're starting to see here in this state, in the capital, and in some of our states. It has to be matched, I will say, with what businesses. I mean, Jack, runs a fiscally, we were talking before, fiscally responsible business, and I hope that the business approach to government carries over into the fiscal management of government, because while we're fiscally sound now and America's, everybody's favorite investment opportunity around the world, things change, unfortunately, fairly quickly, and when the world starts to lose faith in a nation's fiscal stability, political and fiscal stability, things turn around without your noticing. Crises come before you notice them, and we can have another one here before we know it. I'm not suggesting we have one on the way, but it's certainly possible. So the business approach to government, I think, is extraordinarily productive and constructive, as long as it's matched with fiscal stability and responsibility, and a notion that we have to invest in certain aspects of the government, education, infrastructure, and other things along with our private sector.
Okay, in the last minute and a half that we have left, give me your quick takeaway on what needs to change in the roles of public institutions to facilitate PPPs and get more infrastructure built. We'll start with Jamie on the end.
Okay. Well, I think I said at the beginning, I think we need to focus on capacity building, and it's not going to be as simple as simply adopting having a fancy communications campaign, or finding different words to describe what we want to do. It requires hard work at the state and local level. We have, as Louise was saying, we have in a number of states now, adopting legislation that enables P3s to happen. The problem is, there are a number of states, Washington and others, that have P3 legislation, but then a moratorium, or P3 legislation, but a financial cap on the size of assets that can go into P3s. So we're not there yet with respect to the legislation. We need to do the hard work to explain to local officials, work closely with them, and develop projects with the kinds of frameworks that I think our firm and others have adopted long-term, so to show that we can be long-term responsible stewards of public infrastructure and public assets. And then, over time, we'll develop a base of successful case studies that will make our case for us.
Very quickly, I'd say, to summarize that would be, we need as clear leadership and communication to explain the role of the private sector and how we combine can actually benefit the taxpayers. That's important.
I agree. I think that what needs to change, the narrative. Long-term, not short-term. Lease, not sell. Community benefit, not community loss. Get the narrative clearer and focused on the community benefits, and I think you'll get the community to come with you, and then we can get some further momentum.
I would agree with everything that was said here earlier, so thank you.
Great. Well, please join me in thanking this very distinguished panel this morning.
Thanks, Jack. Gents.
Thank you, April.